Cape Coral's housing market was once the envy of Florida, but now it's drowning in a sea of foreclosures. Here's why. Just a few years ago, this Gulf Coast city was a hotspot for investors and retirees alike, with prices soaring and new developments popping up overnight. But then the insurance crisis hit. Skyrocketing premiums made homeownership unaffordable for many. And when the storms rolled in, the damage only made things worse. Now, neighborhoods that were once bustling with activity are dotted with empty houses, their lawns overgrown and driveways cracked. Realtors who used to juggle multiple offers now struggle to find buyers willing to take the risk. And the ones who do? They're often flippers, hoping to turn a quick profit before the next hurricane season. It's a stark reminder of how fast fortune can turn in Florida's volatile market. So, let's talk about what's been happening with home prices lately. If you've been keeping an eye on the market, you might have noticed something a little unsettling. Median home prices have dropped by about 11% since 2023. Now, that's not a small number, and it's got a lot of people wondering what's going on. A few things are at play here. First, mortgage rates have been climbing, which means buying a home just got a whole lot more expensive for a lot of folks. When loans cost more, fewer people can afford to jump into the market, and that pushes prices down. Then there's the fact that more homes are sitting on the market longer than they used to. Sellers are having to adjust their expectations, and that's leading to price cuts. But it's not all bad news. For buyers who've been waiting for a break, this could actually be a chance to finally get into a home without breaking the bank. Still, it's a tricky balance. Prices might be lower, but those higher mortgage rates mean monthly payments aren't necessarily dropping as much as you'd think. So, what does this all mean for the future? Well, that's the big question everyone's trying to figure out. Back in 2021, the housing market was on fire. Prices shot up by a staggering 75% in just 2 years, leaving a lot of folks scratching their heads and wondering how it all happened so fast. It was a perfect storm, really. Interest rates were at historic lows, so people were rushing to buy homes before they got priced out. Then there was the pandemic. Everyone wanted more space, a home office, maybe even a backyard. Suddenly, that little house you'd been eyeing was out of reach and the one you could afford? Well, it needed a lot of work. Developers couldn't keep up, and neither could the supply chain. Lumber prices went through the roof, literally, and construction slowed to a crawl. Meanwhile, investors saw an opportunity and started snapping up properties left and right, turning them into rentals or flipping them for a quick profit. It was like a game of musical chairs, but with houses, and when the music stopped, a lot of people were left standing. Now, 2 years later, we're still feeling the ripple effects. Some folks got lucky and locked in those low rates, but others, they're stuck paying sky-high rents or waiting for prices to come back down to earth. It's a tough market out there, and it's not getting any easier. You know, it's not just a few sellers feeling the pinch. This is a full-blown trend. Over half of the listings out there right now have slashed their prices, and that's not just a coincidence. It's a red flag waving in the wind, telling us something's off. When more than 50% of sellers are dropping their prices, it means demand isn't keeping up. People aren't buying like they used to, and sellers are scrambling to stay afloat. It's like a fire sale, but nobody's showing up to shop. That's not just a market adjustment. It's a sign that confidence is shaky and the pressure's building. If this keeps up, we're looking at a much bigger problem than just a few discounts here and there. So, let's talk about what's been happening in Florida lately. Hurricane Ian hit back in 2022, and it wasn't just another storm. It was one of the most destructive hurricanes the state had seen in years. Homes were flattened, businesses were wiped out, and entire communities were left picking up the pieces. The damage was staggering, and the cost to rebuild even more so. Now fast forward to today, and you've got insurance companies scrambling to cover the losses. But here's the thing. When a storm like Ian hits, insurers don't just absorb the cost and move on. They pass it along to homeowners in the form of higher premiums. And we're not talking about a small bump. We're talking about premiums doubling, even tripling in some cases. People who've lived in Florida for decades are suddenly getting bills that make their jaws drop. And it's not just the folks who were directly hit by Ian feeling the pinch. The whole state's seeing the ripple effect. Insurance companies are pulling out of high-risk areas, leaving homeowners with fewer options and even higher prices. Some people are even going without insurance altogether, which is a gamble no one wants to take in a place where hurricanes are just part of life. So, what's the bottom line? Hurricane Ian didn't just leave physical damage in its wake, it's reshaping the entire insurance landscape in Florida. And for a lot of folks, that means tough choices about whether they can even afford to stay in the homes they've loved for years. The Johnson family sat around their kitchen table, the weight of the past few months pressing down on them. Sarah traced the edge of her coffee cup, her voice barely above a whisper. "We've got until the end of the month. The bank won't wait any longer." Her husband, Mark, rubbed his temples, the lines on his face deeper than they'd been a year ago. "I've called everyone I know. There's just nothing left in this town." Their daughter, Lily, kicked her feet under the table, her backpack already half-packed with her favorite stuffed animals. "Do we have to leave, Grandma?" Sarah reached for her hand, squeezing it tight. "We'll visit, sweetheart. It's just... we can't stay here anymore." Mark let out a long breath. California's got jobs. It's not home, but it's a start. Down the street, the Garcias were loading their last boxes into a rented truck. Mrs. Garcia wiped her hands on her apron, her eyes scanning the empty house one last time. 20 years here, she muttered. 20 years, and now it's like we were never part of this place. Her son, Javier, slammed the truck door shut. "It's not fair. We didn't do anything wrong." She pulled him into a hug, her voice steady but tired. "Life doesn't always give you what you deserve, mijo. But we stick together. That's what matters." The neighborhood was changing, one empty house at a time. The kids who used to play in the cul-de-sac were gone. The porches where families once gathered now silent. It wasn't just about losing a home. It was about losing the life they'd built, the memories they'd made, the people they'd loved. And no one seemed to notice. Governor Ron DeSantis has been making waves with his latest economic proposals, and one that's catching a lot of attention is the $1,000 Homestead rebate. This isn't just pocket change. It's a direct boost for Florida homeowners, putting real money back in their pockets. The idea is simple. If you own a home in Florida, you could see $1,000 coming your way, easing the burden of property taxes. But that's not all. DeSantis is also pushing for broader tax relief, aiming to make life more affordable for families across the state. Whether it's cutting costs on everyday essentials or reducing the financial strain on businesses, the goal is clear. Keep Florida's economy strong while giving residents a break. Critics will have their say, of course, but for many homeowners, this rebate could be a game changer. It's a bold move, and one that's sure to spark plenty of conversation as the details roll out. So let's break this down. A market forecast score of 25 out of 100. That's not great. It's like getting a quarter of the way through a marathon and realizing you forgot your shoes. What does it mean? Well, it's a signal, a big flashing one, that the market isn't feeling too confident about what's coming. Now, why does that matter? Because markets move on expectations. If the forecast is low, it means investors, businesses, and even regular folks are bracing for some rough waters ahead. Maybe it's slow growth, maybe it's instability, or maybe it's just a whole lot of uncertainty. And uncertainty? That's the enemy of progress. But here's the thing. This isn't the end of the story. A low score like this is a wake-up call. It's a chance to dig in, figure out what's dragging things down, and start making moves to turn it around. Maybe it's policy changes, maybe it's innovation, or maybe it's just a shift in how we're looking at the data. The point is, it's fixable. It's just going to take some work. The road ahead isn't just bumpy. It's a minefield. Analysts are sounding the alarm. And let me tell you, the warnings aren't pretty. We're talking deep distress, the kind that doesn't just sting for a moment, but lingers, gnawing at the edges of everything we thought was stable. They're not mincing words either. The pain isn't over. In fact, it might just be getting started. Think of it like a storm that's been brewing for months. You see the dark clouds, feel the wind picking up, but the worst of it hasn't hit yet. And when it does? Well, let's just say it's going to test more than our patience. The numbers don't lie, and neither do the experts. They're pointing to cracks in the foundation, the kind that don't get fixed with a quick patch. This is structural, systemic, and it's going to take more than wishful thinking to turn things around. So what's the play here? Brace yourself. Tighten the belts, shore up the defenses, and don't expect a quick rebound. The analysts are clear. The pain is real, it's coming, and it's going to demand more from all of us than we might be ready to give. But hey, forewarned is forearmed, right? So what's the takeaway here? Knowledge is power, but it's only half the battle. The world's always changing, and staying informed means you're ready for whatever comes next. Don't just take our word for it. Dig deeper, ask questions, and when in doubt, talk to the experts. Whether it's your health, your finances, or just making sense of the news, there's no substitute for good advice. So keep learning, stay curious, and when you need guidance, reach out to someone who knows their stuff. Your future self will thank you. You know how sometimes you finish watching a video and you're just left staring at the screen, wondering what to do next? Well, we've got something better for you. Right after the video ends, you'll see a fresh, clean layout that's all about keeping you engaged. At the top, we've got a row of hand-picked videos we think you'll love, stuff that's right up your alley based on what you just watched. No more digging around. It's all right there. And hey, if you're enjoying the content, why not hit that subscribe button? It's front and center, easy to spot, so you never miss an update. We've made it simple because, let's be honest, you've got better things to do than hunt for buttons. So go ahead, pick your next video or join the community. Either way, you're just a click away from more of what you love.